so we're recording. Let's get started. All right, so let's get started here. This is our review with Ron Stoz, who is a long time reader of the LongVol Report. And I think he's been around. I'll talk about his introduction. I'll let him explain himself in a second. But he's been around since I think 2017. Originally, when I left the firm I was working for in 2014 and 15, I had started an education firm, which we sold. He was around back then. I ended up taking a few years off in 2019 and 2021 as well, and came back, followed me, and has been here ever since. And 2 weeks ago, we had our fall conference. He flew out for the fall conference for a week. He and I were talking about the markets and the October pullback, which we'll talk about in his portfolio. But to give you guys a formal introduction, he's running 1.1 million. Is that right?
Yeah, I started with 1.2,
Okay, it's one. Now you're over 1.4 and change.
1.4 and change.
Okay, so 1.2. You're running 1.2. Um, I taught you a little bit 5, 6 years ago. You went off because I wasn't around then. You went in to learn. We're not going to talk about what you were learning. A little we'll talk about, but you went to learn another approach, running a portfolio. You came back today. You run this portfolio, both long and short equity investing. But instead of buying the equity, which we'll talk about as well, you're using at the money options to express your views, correct?
That is correct.
Okay. So that's an introduction to him. For those of you guys that are watching this, he's a subscriber to our LongVol Report research. We publish that research each and every Sunday. We track 10 to 15 equity ideas, both long and short, covering both fundamental and price action analysis. You guys can get access to that at longvolreport.com and download a free copy literally there. And that's been a big part of his idea generation. So a lot of the ideas he's going to talk about in his portfolio, which we're going to pull up and go through for 2025 and really dive into on this interview today, are coming from that report. He's just obviously changed the structure, which is also deserving of a discussion. Okay. So that's what we're going to get into in this one. I'm going to hand it off to you and let you kind of do an introduction and go over the portfolio. So do you want to start with how we met and talk about your story? And then once we get through some of that, I'll give you control and so you can pull up the portfolio and go through it.
Sure. Yeah. We met in 2017, and it was basically day trading. I didn't know anything about options. I was where I worked at. To tell you the truth, I was worked in the tool and die industry as a CNC machinist or in the CNC department, and not many people knew about options, and I think two of us in the whole plant. So one guy had a little success in it, and I said, "Hey, I'd like to try this." So I found you and your previous company on YouTube, I believe, and it was starting out as day trading, basically, or weekly options. And I'll be honest with you, I did not have any success. There's a big learning curve when you start out, and day trading's rough, and it's still rough for me today. And I don't do much. I do it, but not much. Mostly, I do a lot of swing trading, 90 days or longer, as you will see. So that didn't work out. Dan sold the company and went a different route. Then I had to find some new education, and I found somebody else, and a lot of it was macro, where these guys were traders and they ran hedge funds. Well, the macro stuff was really above my head. I spent a lot of money on this, but it was really too much for me. It's nothing that I didn't really understand. I still don't understand a lot of it today. So, thankfully, I found Dan again, probably on YouTube, but wasn't even looking for him. It just happened to pop up maybe, and he he talked about long short, and which I was learning long short. That makes sense. Long short, keep your portfolio balanced, and went from there. So I contacted him again, and I found you again, and great thing I did. So very happy about that. Yeah.
Yeah. So originally, I mean, look, to give you those of you that don't have the context, so back in the day, we started this company, and this was before like options trading. Like it's obviously way popular today. You and I were just talking off air. The October pullback, I talked about it on the webinar, I think had a lot to do with the retail options flows. So retail options flows are insane right now. People are buying them at all-time highs. Number one, there's all these issues I don't want to get into. Back in like 14, 15, 16, 17, nobody was really trading them. Okay. So there was an easier edge back then because you could trade, like, remember Priceline, we were trading back in the day, BKNG, or now PCLN, excuse me. ISRG. We were trading these like high beta equity names. And again, it's hard, right? And I came from the world of trading short-term futures, and that's what I was teaching. And originally what I did at the firm and what we do today, when we manage money, is long short equity, which was what you were learning at the time. So the difference is I guess you were learning macro. You and I have talked about this off air, and I've expressed my views to all of you that followed me on Twitter or on YouTube. I'm not a fan of macro, and again, unfortunately, obviously you were at the conference the night that we went out to, I think, the Global Ambassador Hotel. My friend Christian Lawrence, who's head of macro at Rabobank, came out and people were picking his brain. And, he alluded to a few things about macro then as well. So I know how hard it is. You're not lost in that. I mean, it's hard to generate ideas from it,
Yeah.
but it's not the approach that we take. I mean, what do we do here is a lot different. And so I guess in your words, before we pull up your year in P&L, go through trades and take questions, talk about your approach and then our approach, because obviously there's going to be a difference to it, to the stock picking and how you're generating ideas.
Okay. So my approach starts out every morning's the same. I subscribe to a site called Insider Arbitrage, and they email me buybacks, company share buybacks, and I start with that. I write them down on a piece of paper. If it's $1 billion, sometimes it's 5 billion, whatever it is, and I write down the percentage cap of what market share it is for them, and I go from there. Then I'll just write it down, and maybe at the end of the week on a weekend I'll start looking at charts and digging into the companies and see what I can find. So buybacks are good. I also look at the fundamentals, the free cash flow, the debt, and I use Coifin for that, and just to get me started in the right direction. So yeah, that's basically what I use. And of course, the other thing I use is your report, which is I don't want to take credit for all my success, but probably 80% of the stuff I get is from the LongVol Report, and I'll dig into those also. And especially, if I like a chart that's beaten down, it's something I'm interested right away, especially if it's been down for 3 years and they announce these buybacks. I like to front run things a lot. I don't wait for a particular setup, but I do front run things, and it's turned out well. So
Yeah, and look, I want to talk about that as we get into later discussion on this interview. You're able to front run things. This is important for those of you that are new to investing or haven't used the structure he's been using, and we'll talk about in a second. You're able to front run things because you're using at the money options with time. Okay. Now, obviously, it's a double-edged sword. October, we'll talk about P&L because it pulled back a little bit, but when things are beaten down or even on highs, because you have so much time and the option, it allows you to, again, be wrong for a little bit. And I think that's important for people to understand if you're really going to dial in what it is he's doing, because that's an important part. But obviously, the stock selection is an important part as well. As far as share buybacks go, okay, so explain to me, why you started looking at that. What are your views? So what's the edge there for you, and what's the thought process behind that? Is it an idea starter, or is it like, hey, I have to have this?
no, it's an idea starter, and
Okay.
that's something I learned from you. It's
Okay.
an idea starter, and I go from there. That's all it is. It doesn't mean it's a position right away at all. It's just something an idea. Another idea starter is the IBD 50. I look at. I'm always looking at that. I love that. So that, and other ETFs too. Look at their holdings. So those are all idea starters that I look at. And
Okay. So yeah, I mean, so we talked about the IBD 50 in the FOPT lectures, right?
correct. That's where I
So
got it from. Yeah, I never heard of it before. So yeah.
yes. So do you want to explain that to people that are watching this, what that is and what our views are of why it is? Because again, you and I talked about the conference. They weren't there for this,
Yeah.
but I'm all about efficiency in the research process. Okay. So if you want to explain that to them, what that means.
So the IBD 50 is just they list their top 50 holdings for that ETF, and they're always switching around. So sometimes every day it's different. But I look at it like every 2 or 3 days and see what they eliminated and see what they added, and that's all it is.
Okay. So from there, you're taking, okay, whether it's a share buyback or IBD 50, or I taught you guys like to look at ETFs. So for example, recently we just wrote a piece yesterday, I think, on XLV. So healthcare was getting inflows. I taught you guys to look at ETFs, see what's in the ETF, and then from there, whether it's buybacks, IBD 50 or inflows, that's when you start the research process.
Correct.
Okay.
Correct. And other ideas I get from just watching other people do interviews, like Stanley Druckenmiller did an interview. He made a comment like everybody was into China then, and he said, China's okay, but I like Argentina better. So I looked at the Argentina ETF and I bought YPF and Melly, and those took off great. So I made a lot of money from those. Just something simple like that.
Was
That's all.
that was that last year when we were trading that stuff, or was it this
Yeah,
year?
when did let me YPF? I got into that. I got into that October of 24. Yes.
Yeah, I know
Yeah.
we were trading Argentina last year in the report.
Yeah.
Then me and Brandon were talking when he was in. I know he was long Brazil, but we were long TO and Cressy again, and ARGT into the recent elections. I don't know what year it was. Okay.
Yeah. October 24. Yeah. YPF and Melly, the two I traded, and those worked out wonderful. And another thing I learned that once you make a trade, it's not over. You can do it again. You're waiting for a pullback and another entry point, and let's get in it again. So
Yeah. So we'll talk
yeah,
about this. So as far as the research process goes, to kind of conclude this, and we'll move on to the next point is, buybacks, obviously the report, you're looking at ideas, IBD 50, and then, other you watch I know I give out, we talked about it at the conference, I'm not going to do that anymore, but for a lot of people that watch the webinar podcast, I mean, legitimately, you could just watch it the past 2 years, never paid us for the research and got some ideas. So
you get a
obviously,
lot of ideas just watching a podcast. You
I
get
know,
a lot of
I'm
you
gonna,
get
I'm gonna
way too
stop.
much information. So
I know. Look,
yeah, yeah.
I'm going to stop, but that as well. So okay, so that's how you're doing it. Then explain to me, because this year we dropped the research report from 35 plus names, which again, look, we run money. I'm like really actively trading the markets personally, so I'm
Yeah.
always looking at. I always want ideas. That's like my world. So we dropped it to 10 to 15 names. So for people that don't use the report, explain to me, when you get this thing every Sunday, like, what are you looking for? Are you looking at the highlights? Like explain to me in your words, when that comes to you, what do you do with it?
I'm looking at the charts right away because I trust your reports are spot on. So I mean, you're so much better at this than me. So I'm looking at the charts right away and looking for an ABCD pattern, something like that, a double bottom. That's all I'm looking for. And then I'm looking at it, is it tradable? How wide are these spreads, or do I have to buy the equity even? Which I haven't bought much equity at all. Some things I bought when the stock is real cheap that options don't pay, and then you want to got all the time in the world. But that's what I do. I'm looking at the charts basically. Yeah, and I might pull up Barron's or Market Watch and do a search on that and read an article, see what's the latest on it. But
Yeah.
that's all it is.
Okay. So to recap this is entirely different than a macro approach. Okay.
Oh
So for
God,
those,
yeah, yeah,
yeah. I mean, so I don't want to take the words out of your mouth, but when I know what you learned, because like I came from that world. I have friends that do this. Explain to me quickly, and then I'll wrap this up. I promise. When you guys are looking at macro ideas, how does that research process start versus what you're doing now?
that's just it. It's such a that the macro. I really didn't have a research process with it. They gave me a lot of data that I didn't understand. So I was lost in the macro world. Like, I think these are guys for, like I said, who runs hedge funds and banks, bank analysts maybe. That that's not me. So
Yeah.
it was just too much information for me. I just needed something simpler. And I realized, once I took this course on macro, I thought I'll never be smart enough for this. It's like this is way out of my league, but it's not true. You made it refined so we can understand. And if we have questions, you'll answer them to help us understand. So that's what helped a lot. But macro is just too much. I didn't get any ideas from it. It was a lot of
The
Excel spreadsheet stuff and a lot of numbers. And if I can't
Yeah,
read
I mean,
between the
look,
lines, you know.
we talk a little bit about macro in the FOPT lectures, and for those of you guys, when I keep saying FOPT, we created a 55-hour lecture series in our thing we did last year. It's not available right now, but we may produce it again. But in there, we talked about a little bit of macro, and our views on macro are pretty simple. We're not interested in all this esoteric data. We're interested in, again, what the Fed's doing, again, what other central banks are doing, and we're just taking that information and saying, okay, if they're doing this, what does that mean for risk assets? All right. And again, going back to conclude this, and we'll pull up your trades here. At the end of the day, what you're saying now and what he's doing is your stock selection process is based around the report, fundamentals of a company, and then finally the price action. Okay. Which again, I know what you learned. I've met some of our readership. They absolutely shun technical and price analysis, right?
Oh yeah, absolutely.
They hate it.
They hate it. Yeah.
Hate it. And look, it's no shock. I mean, I'll just tell you guys this, okay? I mean, I have some friends that a lot older than me, by the way, that are money managers, that are advisors, and a lot of them in public will tell you they don't look at this stuff. But I get emails from these guys. Just got one the other day asking me about cryptocurrency and what my technical views on it were. Okay. So for anybody out there that shuns this stuff, by all means, at the end of the day, I mean, I'll let you be the advocate of it, but you said it earlier. When you get the report, the first thing you do is look at the price charts.
Correct.
Okay. And you're looking at the price charts because again, you're doing what? Entries, trying to determine what idea is
Looking
better
for
than
a decent entry, right?
okay.
And you're not always going to nail an entry. I know people get upset when you enter some and it moves against you right away, but that's why we buy 90 days out or longer to give us some time.
Okay.
So yeah,
Okay. All right. So we covered that. So we covered kind of your research process and how you pick equities. And then for those of you guys that are listening, watching this, the investment process needs to be repeatable. And the process that I've taught him is bottoms up. When we take a technical approach, it's top down. We look at large time frames and break it down. This process repeats over and over and over. Okay. So again, before this, you didn't have a process to generate ideas. Now you have a process. Now we're going to move on to the expression of a view. I think for a lot of investors out there, and again, you can attest to this and speak your truth on it, that the execution process is where a lot of people screw up. Number one, I think in today's day and age, too many would-be investors use short-term options for, I want to cuss here, but I'm not, for everything. Or number two, they get complex with spreads. And I know what you guys did as far as spreads go. I don't like them. I know why they did them. But again, if you understand, and this is a key here because I told some of your people that went to that place with you, if you understand the technical aspect, it allows you to understand when a move could happen a little bit better than without. Is that a fair statement?
oh yeah, absolutely. Yes.
Okay. Okay.
Yeah.
So let's do this. Let's have you pull up the spreadsheet. Let's walk through the year-to-date returns, the good, the bad, the
Okay.
ugly, talk about some positions, and kind of talk about the structuring and the views on that next.
Sure.
Let me give you access to it, and that's what we'll
All
do.
right.
If I can figure out how to do it here. How do I provide you with access? Okay, Ron. Make host. There we go.
All right. Let's see if I can share this. Can you see my Excel sheet or?
Yeah.
Okay. So this is an Excel sheet I have, and you can see my starting capital is 1.2 up here. Um, I had a total of 196 trades. 116 of them were winners, and 80 of them were losers. So I won a total of just under $548,000, but I lost $338,000. So my total net would be just under 210,000. At one point, probably about maybe 2 months ago, my account was up to 1.550 was the highest. But now, right now, I'm about 1.4, a little over 1.4.
So,
So,
so 1.550 would put you at a rate of return of what's that? So or 1.15. So you were up at one point.
Let's say 350 I was up, so
Okay.
10%, 20%, no, a little more than 25% maybe I'm thinking. Yeah.
Okay.
So, um, yeah, I'm sure people are saying, yeah, why'd you give it all back? Well, yeah, I didn't want to, but the last six, before this week, maybe the last 6 weeks or 4 weeks is brutal. It was bad. So, there are losing trades. Yeah, it sucks, but it's part of the game that we get into, and you got to deal with it. So, yeah, it's not fun. So, my average days per trade, I got 34. Probably a little misleading because I do have day trades in there, 0 1 days. So, but I would say most of them are between 30 and 60 days. So, so yeah, I'm very happy with this year. If you would have said, "Hey, Ron, if you're up 200,000, or more at the beginning of the year, would you take that?" I go, yeah, in a heartbeat. So, yeah. And
Yeah.
and all my position sizes are usually the same. I don't like one trade more than the other. So maybe I don't know if I got to change that, but usually my positions are between 8 and 12,000 a trade. So I'd say $10,000 a trade. It does, contract size are different, but equity side, the position size, like usually
So,
$10,000.
so basically 1% of the portfolio.
Yeah, which it probably isn't much. Maybe I should do more. I don't know, but as I get more confident, they'll probably grow. So
Yeah,
so
I mean, I think there's a lot of takeaways from this, and I want to just interject quickly. So,
yeah,
look, for those out there, and there's a question that came we're going to get to later. Running, I see it on the internet all the time. I can beat hedge fund managers. I can just trade SPY short term. And the difference is this, is that strategy only scales so much. And I was talking to some people earlier this year and over the years, you can trade short-term options, which we do here and there, but unless you want massive P&L swings, it's hard to scale with size. So on this size portfolio, for those of you that don't recognize this or haven't thought about it, I guess, what he's doing here is also portfolio management. It's not just that he's swinging for the fence, looking for the next hot stock or next, again, growth stock. He's taking what we just talked about, idea flow, and he's putting out 1% risk, which is, again, I mean, you came up with that number. I didn't give it to you. Which you came up with. Number two, which we'll get into next, is the at the money options, which I'm curious to why you did that approach, and I'll let you explain it. But I just want to point that out because I think the return this year is incredible. Even though you were up a little bit more, the reality is this, is that, yeah, markets pull back. It's just, look, we were subject to it too in portfolios that we run. It's what it is. So for those of you out there, you're like, oh, well, I was up this. Well, tough shit. I mean, that's the markets.
right.
Yeah. So it's just, I mean, I'm not trying to be,
No,
that's just literally, it's what this business is. And you've done this for long enough. And last year you did it as well. I mean, I think you were up six figures last year as well.
yeah,
This
yeah.
isn't like a one-off fluke. Okay. To be clear.
No, no. Matter of fact, I remember asking you, we had a good year in 24. Can I expect 25 to be the same
Yeah.
or,
Yeah.
I wasn't sure. So I said, I better keep my sizing right. But anyway, yeah, when he talked about, when I got the first idea from Stanley Druckenmiller, just watching a simple interview about Argentina, one of the first trades I put on was YPF. I looked at the stock and you can see here, I made $14,500 on it, and I held it for 106 days. That and Melly I got into,
Okay.
which I freaking I have to find that someplace. Let's see.
So
That
106 days for a lot of people is a long time.
it is. And Melly I held a hard in 18 days, and I made 14,700 on that. And that's an expensive stock. I had to put a vertical on that one
Okay.
because it's so expensive. I think the last time I looked, I think the a share was like $2,100. So
Right.
it's expensive. But yeah,
So talk about that quickly. Okay. So let's like deviate for a half second here and talk about structuring of ideas. Okay. So number one, the first edge in all of this, which again, I don't think this is ever discussed enough in the investing space. The first edge is your analysis on what you're going to invest into, correct?
correct.
Okay.
Correct.
And so then you, and this is important to highlight this because for us, this stuff is like very simple because you see, we're like, oh yeah, the stock's going to go higher. It's great. But what you just said was, I didn't know you did this. You go, look, the stock's too expensive to allocate shares to it. But then I looked at the options and I ran a vertical instead. So what you're doing in effect, and I'll let you get into it, is each idea, you're not just like a robot systematic. You're analyzing the idea and saying, how do I best put money to work in this? And I'll let you explain the rest.
Yeah, so when I invested in Melly, I just saw that I got the information here. The strike was 1840 on that. And like I said, the options were very expensive. So I just bought a vertical on there and just to reduce my cost. And it worked out well. I went up every day when I had it. So, and I just about, I think my max profit was on there was like 16,000 on the vertical because you can max out your profit on the vertical.
Right.
And I cashed out at 14.7. Like this is good enough. So, but yeah, and that's all it was. So, those are like the two simplest trades I had. that you put it on and it just kept on going up. I've had some other ones, but I got those from the LongVol report. Um, Other than that, so another position I did well on a couple times this year was Baba. Um, I had that for 56 days, and you can see I made over $20,000 on it right here. And I got that from the LongVol report. And then I got into it again. Uh, it's right down here. I got into it again, and I held it for 3 days. Same name. I held it for 3 days, and I made over $7,000 on that. So that was a
And
nice
and those
repeat.
trades are at the money.
Oh,
Those
everything's at the money, Dan. I never go out of the money ever.
okay.
If
So
if it is out of the money, it's because the strikes are staggered $5 or something like that. That's all it is. But everything I
go
do is
back to what you said about 10 minutes ago. And I want to highlight this because you're not the first person to tell me this year. Other people said the same thing. And I think this is valuable to people that are watching this. You can trade the same idea over and over. So it's not like you see a company, you make money on like, oh, I can't trade that business again. So walk me through why that is and that whole thought process.
well, I got out of Baba, and obviously there was a pullback, and and we love pullbacks. Yeah, they're painful, especially when the market does it, but there's nothing wrong with a pullback to give us another entry point. And that's all this was. It was a pullback. I got in right away, and 3 days later, it spiked again. So, yeah.
Okay. Do you do that a lot where you're trading
I,
same
I
names over and over?
um I've done it. This is the first time I've done it. I don't have a lot of examples of a lot of names over and over, but
Yeah.
they're in there. So, but
Okay.
yeah, I'm waiting for Boeing to pull back a little bit. I thought it'd be pulled back a little more, but it hasn't yet. But I think it's on 180, 185, which is
Yeah, that's where
I
we're
was
at.
hoping for like 175. That's all it was. So, but
Yeah.
it might get there, it might not. But if I miss it, I'm not going to be upset about it because there's always trades down the line. Down the road, there's always going to be a trade.
Okay.
So
What about that Hershey position there?
that Hershey position was awesome. Check this out. This is one of my bigger positions. I think my second biggest position. 28 over 28,000 I made. I held it for 43 days. Of course, I got that from the LongVol report, which was outstanding. And I remember this took a little while for it to move. Um, it was all predicated on the price of the cocoa bean. So yeah, it took a while to move, but when it moved, it finally went, and I got out of that. So yeah,
Okay.
and
So a lot of these trade, I mean, some of these for the about 56 days holding times. Let's talk about the the structure. Okay. So obviously, when we put out research or you do your own research, which I've taught you to do through FOPT, obviously you have the money. $1.2 million isn't chump change. You have the capital to allocate towards equity. So, and again, we'll talk off here because I have some things I want to talk to you about for next
uh,
year. But why this structure versus what you were doing 3 years ago before we met again, spreads, and why this structure versus buying the straight equity?
um, well, the leverage you get is a lot better with the options, obviously. So that's the biggest thing. I could buy the equity, but I think I can put a lot more positions on with options, and you know, I got like 30 positions on right now, and that's all it is. The only time I buy the equity is if it's, you know, like even $20 or less, and the volatility, if the volatility isn't there for it to move, I'll just take the time and buy the equity and let it ride, go from there. You know,
Okay.
if there's a lot of volatility, I'll buy the option because I like volatility. You know, so it
Right.
move. I want it to move. You know,
Right.
so that's important to me.
Yeah, that's important as well. I mean, you know, we had this conversation for those of you that are new to options, and I'm going to try to dive into the deep in the money stuff and at the money stuff here for a few moments. But, you know, we had a company that we flagged in the research. I'm looking at it right now. Astronics, the ticker symbol's ATRO. They're a small cap company. In August, they're trading at 25 bucks a share. We flagged it as a turnaround, which it has been. And one of the things we talked about, you know, at the conference a few weeks ago was it's a small cap equity. Okay. And the options on a small cap, they're pretty much non-existent. So you couldn't take that idea and do what you do with the structure on it because there's no liquidity on the options.
Right.
Okay.
Or if the spread is so big, it's just like forget it. You know, good luck getting in and out, you know, at a decent price. So, but yeah, yeah.
Okay.
Um,
So to some extent, I mean, so you could take this approach provided that there's like markers there. Number one, that the underlying equity has some volatility to it. Number two, that the spread's not through the roof. And number three, that there's liquidity on the options chain.
right,
Because
right.
otherwise, without it, you can't take the execution structure and make it work.
Correct.
Okay.
Correct. Yeah.
Okay.
So, another big trade, I think my biggest trade is probably, Broadcom, Avgo, if I got that someplace, if I can find that. Um, yeah, right here. I think this is it. Yeah. No, that's that one. That one I made 7,800 on, but there's a bigger. I made one over 30,000 on it, and that was I remember that they announced the share buyback,
Okay.
and they when I looked at the chart, it was just beaten down. It was just it, beaten down, and I want to find what strike I bought on this. Let me see if I can find this here.
I've got your P&L here. I'm looking at it too.
Okay, let's see.
You made a lot of money on AMD as well
Yeah, Apple. Here it is.
and XME. You've had some really big wins. Like,
Avgold, yeah, total of 30,000 on there. It was this
so
was
this
in
was open
March.
April 9th, 2025. Oh, wow.
Three. No, I lost it again. Where's my Avgo? Okay.
It's literally breaking out as we speak too. Nice.
Avgo is
Yeah.
still. I don't want to hear that.
Like
I know. No.
another all time literally like right now. Um which you know the setup on that again, it was like so clear 377.
I
It's
remember I paid $33 for the option, and I
yeah.
sold it like 127, something like that. So it's just crazy. Where made
Okay,
some.
so it's not showing the full P&L on that though. Yeah, it's not, right? Because you made more than what that's showing.
Yeah, because I remember I bought three contracts. I sold one because there it is. I sold one. Oh, the one I made 78. I bought three contracts. I sold one. It was way up and the earnings were coming out. I didn't want to take a chance. I sold one contract. I'm like, if it misses, I'm going to break even. I'm going to let
Yeah,
two ride. I let
smart.
two more ride. I held it for 135 days. It's on line 125 here. And I made 22,000 plus the 7,800 on that one. So I just under about $30,000 I made. And okay, so the strike was 160. I paid $33 for the option. I got out at 143.50 it was.
Yeah,
And
crazy.
it kept on going. And it kept on, it was just crazy. And I remember when I looked at that, they announced the share buyback. I looked at the chart. It was just beaten down so low. I'm like, this thing's going to run. It's about time this thing takes off. And it hasn't stopped yet. Still going.
Okay, so that was entered on April 9th, 2025. The stock was I'm just
April
trying
9th.
yeah,
Yeah.
I'm gonna try to paint a visual picture for people that are watching,
Okay.
listening to this. Okay, so the stock was down from basically all year from 235s. I mean, just clobbered. Basically 41%. well, everything got, you remember during the tariff situation, all that shit show.
Right.
So that thing got hammered. Again, the insider arbitrage, by the way, we track a lot of buybacks too, but I think I told you guys to look at that if you want that data. So that comes out, you see the share buyback. You're like, look, this is a marker we look for in some research. You take that, you look at the chart, you run your price analysis. The price analysis say, look, this is probably going to move. From there, you go and say, hey, look, I want to buy
I bought the 160 strike. So what was it on April 9th, roughly?
I mean, we closed at buck 80. Low was 157. So basically, you're saying, look, I'm at the money,
Yeah.
and then I'm going to go all the way to March 2026.
Right, right.
Yeah.
Because you know what? What was happening in April? Remember we got beaten down in April? Oh, it was really depressing. I'm like, so I didn't change. The only approach I think I changed, I didn't go 90 days out. I started buying leaps. I started going, okay, let's go 180, 240 days out, 300 days out, stuff like that. I said, maybe I need some time because this is going to take a while to pull back, to bounce back. It bounced back a lot quicker than we thought.
Yeah.
So yeah, which
All
found
right.
that.
So I want to highlight this too. Okay. So look, when you guys talk about markets, I don't want to interrupt too much. I know I am, but I want to highlight these things. I've done it for so long. And for new investors or people that are getting into this business, there's things that you're doing that people don't talk about that make a material difference in performance. Okay. So you, as somebody that's been doing this for a while, recognize that the dynamic of the market shifted. Okay. So a lot of people that, and I'm not knocking this, I want to be clear that you have to be dynamic in your views of markets. So originally you're using 90-day options all at the money, but then you look at the market and say, look, a lot of things have changed. Tariffs have come out. The market's just getting taken to the woodshed. I now need to look at this and say, no more 90 days. I need to go further out of time. And you did that. You didn't expect the rally to happen what it did. It blew up better than a stick in the eye. You still cash in for a lot of money. So I can't stress that enough to new investors, whether you're short-term trading, investing, you need to take into account the overall market environment and adjust for that, because a failure to do so, whether you're leaving your trade plan, is deadly. So, I mean, again, I know this comes natural to you and I because we do this, but that's something that you should talk about or highlight. So,
Yeah, absolutely. Just I just when I took a big hit in April, I thought, you know what, just buy some more time. It's going to come back. It might take longer. Instead of going 90 days out, I went a lot further out, even in the next year then. So
yeah.
we said 240 days or more, and then the market came back with a vengeance.
Yeah.
So,
Okay.
yeah,
All right.
yeah,
So that was a pretty big trade. Let's go over, how about Cell 89? Talk to me about GXO Logistics. Again,
yeah.
why the name, the structure, rate of return, etc.
Yeah, so I see it as 85% I rate of return, $9,000. I held that for a while, 123 days. GXO I got from the LongVol Report, which yeah, which I never heard of until you put it out. So obviously I got that in July, and it's a slow moving stock. It's nothing, it's not like an Nvidia or a Mag 7 name that, it's just a slow grinder, and it worked out well. So,
Okay.
but yeah,
So on that trade, longer term, you put that on in June. No, sorry, you put that on in February. You bought July
February,
options.
yep,
So
I think,
March, April, May, June. So
yeah,
even then, 5 months. So
yeah,
again,
123 days.
yeah. So I think you're using a lot of time on these positions
Yeah,
at the money or in the money
yep.
on a lot of them, and then you're adjusting the time on an individual basis based on the stock, the chart, and the overall market. You're
Right.
making,
If it's a slow moving stock, I'm going to buy more time, give it time to move. So, yeah, absolutely.
yeah.
So,
I mean, look, I don't have there's this meme going on in the younger generation. It's like when something happens, they rate it, they'll go 10 for 10, no comments. I have no comments at all for you. I think whatever you did in FOPT or been around the past few years, I mean, these are everything I would have done. So I mean, I think you're doing a good job. I mean, a lot of this, I mean, really just crushing it. So
Well, yeah, thanks. And I think I got a lot of friends that when they buy something, they pay way out of the money because they're always looking for a 10 bagger, and it's just not often as it's not there as quite often as you think. Yeah, people post them a lot, but I don't think they're there as much as you think. Um,
oh, so you did have a position on Astronics though, on
yeah,
options.
I did. Where is that? That's
What 181.
181.
So you made that work.
Yes.
Yeah. Okay. So you had
Yeah,
a 15 contract position on that at 520. You sold them at 1215.
correct.
Yeah. So look, you had to have been like with me on that one because
Oh,
I
that's from the long vault. Yeah.
I think we were 50% of the options volume on that. I know what strike that is. We were the majority of the options volume, but 95% of what we did was we bought the equity. So
Okay.
we were probably buying and selling to each other at some point on that.
Another one that I could have made a boatload on is if I could find it was Aklo
Okay.
that I was in. Let me see if I can find that guy. Let's uh here it is.
I love that thing all summer.
Okay, sell 75 and 101.
Okay, let's see. 101.
75 and 101. 75 I made 8,000 on.
This was you put this on in
January.
January and you bought leaps on this thing.
Yeah. Yeah, because we didn't know what it was gonna do. And then
Right, right.
and I wish I would have held it because I sold it at I was so happy I made that much money, but if I remember after I sold it, I kept on going and it was what was strike a 35 strike. It might have even gone over 120 bucks.
Went to 200, 195 a share. I know.
Yeah.
I,
I
I
can't imagine, and that wasn't even fundamental based, I remember. That I don't know how you found that, but
no.
that was all you.
Complete garbage company with no revenues,
Yeah.
not even one center built. And look, I wasn't going to bring this up, but I'm glad you did because I want to talk about this to those people that are watching this show. Okay, so a lot of what we do as far as research goes is I would say 90% of the time we're trying to find good companies with good financials, you know, with share buybacks or something materially changing the business, or like Argentina this year and last year, where there's like an event driven macro catalyst again that's going to adjust the price. But the other like 5 or 10%, we look at what we call shitcoins. Okay. Companies that, you know, you see on Reddit or people like Oklo that they're betting on momentum. And we put these ideas in the report, not because I think they're going to make us wealthy or I'm going to allocate 10 million bucks to it, but because they provide stuff like this where you can ride the momentum with a small amount of money, pick up a few pennies here and there and be on with your day. So that's exactly what that was. I just want to make that clear. So
Yeah.
yeah, that thing went to 195. We were trading it this summer. I was in New York with Matt. Um, and in between doing the golf thing at the member guests, I was staying in this shithole hotel. By the way, he told me to stay in. And I remember sitting in this room trading that thing and just murdering it. So yeah, I remember that a lot. Goldman Sachs, you crushed it on as well.
Yeah.
I mean,
That
huge,
was,
huge.
that was just an interest rate play when they talked about cutting rates and stuff, I think it was. And that was way back when. I can't remember the, where is that one?
77.
Okay. Yeah, that was a nice trade too. 42 days only. So, nothing special there. I mean, when you got solid companies, really, you don't really have to look at the fundamentals too much because they're pretty solid, these big companies. But you still got to look at the chart and just do a little test, just a little deep dive into them, not much, but that's how I feel about these solid companies like that. So,
Yeah, I agree with you. I think look, a lot of this, it's companies like Astronics or GXO or the stuff that media doesn't talk about that
right.
you got to pay attention because you're diving into uncharted waters. So, But I think the takeaway for those people that are still listening, and this is a great conversation, by the way, that are diving into this is not every investment idea has to be like an Astronic that doubles or a GXO that we're betting on for 3 years. I mean, you could sit there and put on idea flow when things pull back if you understand the price action analysis approach. I mean, I think that's a fair statement. I mean, that's a lot of what you're doing as well.
Yeah, yeah.
Okay.
And the same thing happened on Cell 97, Dan, is Seagate Technology, which I never heard of. I got a buyback on them, and
Let's see, 97.
Seagate
Oh,
Technology.
STX. I know these
Yeah,
guys. Oh, that's
yeah. I never heard of them before, so it was just a buyback there, and I liked the chart, and only held it for 46 days. I made 243% profit on that thing. So
you
that
bought
was,
that in May. You had the September option. So true to your approach,
yeah.
25K on this. Okay. So I think, look, and we've got to talk off here on some stuff for 2026, but a lot of big wins this year. Look, I don't want to shy away from this. We talked about it off here, and I want to look, we don't run away from anything on this show, even when we cover equities and portfolios for clients that we miss on. We face this stuff head on. I've been in this business for 2 decades. You're going to get your ass handed to you sometimes, and you're going to win. I'm not trying to be a chat about this, but sooner or later, the longer you do this, you just take it on the chin and you move on. So I want to talk about the pullback in October because obviously, using deep in the money options and at the money options, even long term, when things do go south, it's a double-edged sword because it eats at the premium. Okay, even with long-term stuff. So you did pull back from peak highs. I don't think anybody didn't pull back. I mean, we pulled back a little bit in the managed portfolios. Thankfully, we hedged out a lot of that with short-term trading stuff. But we still had a rough October. Okay. So talk to me about the October, November moves. What are your thoughts on mentally how you handle that stuff? Because you've done it for a while. And I think people want to hear from somebody else except from me explain that.
So yeah, if you look at the bottom of my spreadsheet, which I got here, all this red, that was I closed a lot of positions. Um, Usually as a trader, when I open something up and it goes against me, I let it go to zero. And I'm sick of that because there's always that hope in the trader. I think it's going to come back. I think it's going to come back. It doesn't have to. Majority of the time, it doesn't come back, but we always hope it does. So I still had some money I wanted to save out of there, so I closed a lot of positions. Yeah, it was painful, but you're right that, like I said, that's part of the game we're in, and you take the good with the bad, and it's just what it is. So, but some positions, you'll see 100% loss here on Generac and United Health. I had it's because if there's only $500 left in equity left in your position, and you got 30 days left, it doesn't pay to close it, stuff like
Right.
that. So you just gotta eat that. So but yeah, um,
Yeah, the Generac position got us too. And for those of you who don't know what happened there, they had earnings in October. We were long this thing earlier this year. We ran it up, made a lot of money. We sold out of the position. We bought back into it. We in portfolios, it was negative 20% pre-market. It rallied flat, then went negative. We actually put our money to work in it, by the way, this week. Um, Pulled back again, but effectively what happened is it was the worst hurricane season. I mean, luckily for us in PR, we didn't get it, but they didn't have any hurricanes in the Gulf. And what made up for the business was their commercial business, which is crushing it for AI data centers. Again, we don't think it's an issue long term, but when you're using options and you take that big of a hit, you're SOL. So it just happens. It sucks, but
yeah, it sucks. You're right. It
it's what
happens, but
yeah.
it's what it is. There's a lot of names here. Stanley Black and Decker, I lost on a firm. Um, I'm in position IT. I'm still in one right now,
Yeah.
IT, and but yeah, so it sucks, but you know what? It's like I said, it's it's life. We need pullbacks in the market because they're healthy. So
Right.
everything just can't keep on going up and up. Yeah, it's nice, but it doesn't. Everybody would be doing it then. But yeah, we need pullbacks because it's healthy for the market. So
Okay, and so the thing I want to comment on here as well for those that are watching this that I pay attention to from a portfolio management perspective is this. You're running both long and shorts, and the reason that you have a lot of positions is because of what we talked about in the portfolio management views in FOPT. That instead of putting into a position, you're running a million and change, you call it million four, million three now. Instead of going all in, let's say, for example, in Generac, which we really believe in, by the way, again, this is our opinion, and throwing a $500,000 in the idea and having it gone against you 30 or 4%, 30 or 40%, you spread out this risk into a lot of ideas. Okay. So talk to us about why a long short approach, why these positions versus just taking five and putting it to work, the money to work.
I take a lot of positions, just because, mostly because the share buybacks was for the last year, it's been incredible. And it's like every company's doing it almost. So you just can't take it for granted that every company that does a buyback, you're going to get into. But I believe this market's going higher. So I have a lot of positions. I got some shorts. And you know what? It's hard to find shorts, I'll be honest with you.
Yeah, we talked about it this
What
year.
the way I express my shorts are, I'll short the S and P's, the SPY, or the Qs, and that's enough for me to put a short on. It's a, I don't want to say it's a large position, but it's probably like 10,000 each on them, and
But it
there's
adds to
my
P, but
other.
it adds to P&L. It adds to overall P.
Exactly.
Yeah, yeah.
You
Okay.
know, you I don't want, you hate for a black swan event to happen. It's probably not going to happen, but it can. And when it does happen, is usually it happens when nobody talks about it. So,
Right.
if everybody's talking about a recession, it's probably not going to happen, is my view. It's just the way it is. But the only thing I short is usually the SPY and the Qs, just to give me a little balance. It's not equally balanced, that's for sure, because I believe the market's going higher.
Right. Okay. So that's that. One of the final points that we'll kind of move on. So we've talked about at the money options, your structure of ideas. Hopefully people are getting an understanding of that. The next thing I want to get into and go through is this Excel spreadsheet. So look, I think it's important for people to use something like this because you can go through and see the data and collect it. I know for a lot of new investors, there's software to do it. I'm old school. I mean, when we had to do this stuff, I used an Excel spreadsheet. I don't really use it anymore. Um, but explain to me why do you use this, and does it help you? I mean, what's the point of this?
Well, the point of this is to know where I'm really at. And sometimes, you'll find that certain tickers are good to you, and some stocks you stay away. Like right now, I have a no trade thing with like PayPal, which is a thorn in my side. But you'll find some equities are, for some reason, they move consistent, and that's all it look like. When I look at some things, I'm a, I'm amazed how many times I traded Baba, for instance. Like, why? I traded a thing like 4 times today or this year, which I didn't expect at all. So that's all. It's just to keep me, let me know where I'm at, um, and it's just information for me to look at. That's really basically it. It's nothing
Yeah.
for me to shoot around to people or anything like that. It's just for me to know what's going on with what I'm doing. So,
Yeah, look, we do the same thing. And I know you asked me earlier. Look, you said two things earlier I want to comment on. Earlier, you sent me an email this year saying I don't have enough shorts in my book. And I replied to you, this is during April Q2. I go, look, there's just not a lot of shorts to take. So this is, again, one of these
no.
situations where if you are running some long, some short, there's not really a lot of short. And by the way, for those of you that are watching this that are true long short, this isn't, again, we're not true long short. It's just, again, they have long exposure and some shorter exposure to balance off anything that goes awry. So there wasn't a lot this summer. Number two is you're asking me about losses and fixing things for next year. So I think when I look at stuff like this, and I'll have you pull up your equity curve in a second, I look at stuff end of year. So in December, we're going to go through and look at our portfolios. I was talking to Brandon about this, and I can tell everybody here now watching the show, one thing that we need to do better next year in our portfolios is trading the SPY and QQ program that we run better. We didn't make enough money trading the vol this year on that. Okay. So I understand what you're saying as far as looking at this data, because you can look into it, take that away, and adjust to get better for next year. And I think that's important for a lot of investors out there to do, because it's not just, again, we've talked about so far on this interview, equity research, you know, price analysis and structuring. Like, your job doesn't end there. It's not done. And I think that's important. So I'll leave that there.
Right.
You want to pull up your equity curve so they can see that a little bit? I just want to
Yeah.
just comment on this quickly.
So
So
load up.
yeah.
Yeah, it's hard to see, but yeah, 1.2, and right now it's just at 1.4 right under it here. But this is from January 1st all the way to November 19th, which is my last close trade. This is actual realized P&L now
Okay.
we're looking at. So this is um where I'm at. So yeah.
Okay. So that's a pretty solid year. The final question I have for you, and then we'll get to some questions on people sent that want us to answer, is this. And that portfolio size, so you typically 15, 20, 30 positions. How much money is sitting at cash, would you say, on average this year
Right now I got about I just looked at that today. I think I got about a little over 300,000
in cash?
in cash.
So you've got about a buck at work, a million at
Right.
work. Okay. All right. So I want to say something to this, okay? Because, you know, we told our investors last year and this year, we've been sitting in a lot of cash ourselves. We were in like 50% cash all the way, literally 50% until Q2 this year. And they were asking questions. I go, look, it's not that I don't want to put them to work. It's just this market on some things makes me uneasy. So your true rate of return is probably a little bit higher. And I'm not fluffing this up, than those numbers. So if you look on cash return, which matters, you've had a pretty damn good year considering the shit show in Q1 with the tariffs, which caught everybody, I mean, myself included,
Yeah.
off guard. Um, and then October. So, I mean, I'll just tell you, there's nothing to be ashamed about on this. I think you've crushed it. I think your approach to idea generation, to your risk positioning, sizing, to different style trades, are not just momentum, not just technical. I mean, you're just, yeah, you're crushing it. So I just wanted to give you that compliment. So
No, thank you.
so that, yeah, that's
I,
that. But that's important. Okay. So I think there's that I wanted to cover. Is there anything else you want to go through before I get to some of the questions that, you know, people in the DeltaOne stuff asked, or from readers want to know about you?
no. Why don't you just what kind of questions they have? But I think we covered basically everything we need to talk about. So
Yeah, I think so too. I mean, and I'll do a recap here in a second, but hopefully we're diving into a lot so you guys can see what goes into this. This is from Matt, who's at the conference with us. He said, my question for Ron, as a regular Joe, aka regular Ron, what kind of things have you learned and what kind of advice would you give with regards to different size accounts? My guess is you didn't start with a $1 million account. What did he say here? He said, I guess you didn't start with a $1 million account. What smaller size accounts have you traded with, and what are things you would or could do that are similar and different?
so when I first started trading, I would put $5,000 in. It wasn't swing trading, it was day trading. And it sucked. I probably blew them up like 4 times, Dan.
Okay.
Honestly, it's just, and I'm like, this is harder than you see the YouTubers on there, yeah, with their Ferrari in the background, killing. I'm like, well, I could do this, but day trading is a bitch. It's hard, and when you day trade, everybody looks for the 2 or 3, 4 bagger, and you know what? If you can make 20, 30% on a trade, get out and be done with it. But day trading is hard. I don't do much of it, and the only reason I do it now because I do have a big account. I can take a little pain, and it's all right. But I don't buy much in day trading. It's not like I put a $10,000 position on. It might be $1,000 or less. So, but day trading is hard. So yeah, my account size was 5,000 until I decided to take a leap of faith. So yeah.
And so you were testing this, to be clear, like smaller accounts, like 5,000. You're kind of dicking around with it,
Yeah.
And you're like, hey, look, there's something here, there. I'm going to put a lot more money into it. Take this seriously. And then that was kind of it. So it's not like, there's to be clear, Samson in the community, which we should get on an interview. This is a 26-year-old kid in the military. He's been around with me probably the same time as you, by the way. I think he was 18 when he found us. The kid literally took five or 6,000. It's proven to literally, I think, $500,000. So he's somebody who did it, but that's not what you did.
Crazy.
Oh, it's crazy. I
It
mean,
is. That's crazy.
he was trading West Texas oil, S&P futures a lot. Again, so he's trading levered products, so you can do that with a small amount of money. But as he got to $500,000, wherever he's at, I don't know where he's at now. I haven't talked to him in a few months. He switched the strategy because you can't trade, that every day. He's got to put on long-term positions because now it's gone from let me take a small account and build it to let me take this money and try to manage it and compound it year after year, which is entirely different approach. And I want to make that clear for those of you that are watching this that only see the world of trading through trading and think everything's that. It's not. What he's doing is portfolio management. Okay. That's not just semantics. It's a different approach to not only the research, the positions that go into the portfolio, why they're in the portfolio, and obviously the rate of returns. Okay. So he asked that. What advice would you give to trading different size accounts? Any advice?
Boy, yeah, you probably don't want to hear this, but the bigger account, the better. Just it doesn't mean you have to go, all in, like in a poker game, but just one or two contracts with a bigger account, put a lot of positions on, and there's nothing wrong with technicals. Look at technicals and do a little research. But yeah, it's a lot easier when you have a sizable account. There's no doubt about it.
He said, obviously, larger account tactics don't at all translate to a smaller account. Uh, okay,
No.
look, I think that's true, but I have some comment on that as well. If I'm trading with like a 50K, 20K, I'm using futures or options and I'm cutting the positions. If I'm more patient, I'm using one or two contracts at the money or deep in the money options to express my views. That's what I'm doing.
That's all you need. One or two contracts. That's it.
That's it.
Yeah.
Yeah. So for sure, I'll just reply, give you my view on this is just don't trade a lot of size and use small size. Like again, think of an at the money option or deep in the money option is 100 shares. You're replacing it. And obviously you're not going to make, $30,000 trades like you are, but it's all relative based on account. Okay. So
Right.
that's that. There's a question from Sandy, kind of a broad question here, but I'm always interested to know how a successful trader starts their morning. Uh, how soon do you start before the market opens? Look, I have some comments on that. When you're new to this business, you do everything. When you do it for a long time, you wake up and dread it. That's what it is. How soon do you start before the market opens? So I'll let you answer that because there's a follow-up question.
Okay. So what I'm usually here between 30 and 45 minutes before the market opens. All I do,
Yeah.
I check my emails first from Insider Arbitrage, buybacks. I look at my positions, pre-market, on my think or swim account. Just go see what's moving, see what's not moving. If it shows it's moving, a lot of tickers we have doesn't show pre-market. Um, I'll do some reading, Barron's, Market Watch, just try to take a glance at some headlines. That's all I do, and that's really it. But I want to be honest with you. There's nothing glamorous staring at a screen all day. I hate it. I really do, Dan.
You and
Sometimes
me,
I
you and me
gotta
both.
walk away for hours.
Yeah.
I just do it. I thought it'd be a great job at first, looking at candles. It sucks. It really does. It just
Yeah, it sucks.
so yeah.
We talked
There's
about it at
nothing
the
glamorous
conference.
about it.
You,
Yeah.
you remember at the conference? So for those of you that missed this, I had these guys. We were at Phoenix time, 7 a.m. to 2 p.m. We were looking at positions in the morning, and then the rest of the day, I was on there asked about researching ideas and teaching you guys how to research. I remember leaving the conference end of the day, you guys would be like, I never thought this is this brain racking to research companies. It sucks. And I go, I told you guys.
Yeah. Yeah, there's nothing glamorous about it. So it seems good. They portray it as glamorous. Like I said, trader wakes up in the morning, puts $1 million position on, doesn't break a sweat, makes $1 million, takes his kids to school, stops at Starbucks. It's just BS. It really
Yeah.
is. So, but
Okay.
yeah,
So 30 to 40 minutes before the open, you're looking at your positions from the report or positions you have on, you're checking on
yep,
them, what new news is coming, whatever. And then, you're looking at Barron's Market Watch, Insider Arbitrage, which, I use and I told you guys to get because it's just like, here's some, again, by the way, that guy's report is event-driven data. It's not research.
right.
It's
It's
like,
event-driven data, right? That's all it
yeah.
is.
So it's like, hey, is there insider buys, buybacks? Like it's material information. And the reason we pay for it is because I don't want to have to search. It's $100. I just paid for it. And you
Yeah.
get, so you look at that. You read Barron's in anything interesting, you just get in the tune and then the market opens.
And
And
I look at my positions to see, how many days I got left before an expiry. Hey, I might have, 14 days left. I better start looking at this closely, and if I need to get out, or, if I got a winner, something like that. But if I got like 50 days left, okay, we can just take a sigh of relief and let it go still. We got time, because, I'll be honest with you, I feel like 2 weeks in the option is like an eternity. So, especially if you're close up your strike position. So yeah.
okay. So that's important. So there's no motivational speeches, ice fast. I mean, you're
No.
you're getting up before the market, you're doing this stuff. And I want to highlight this for everybody. And I'm not talking to Sandy with this, I'm highlighting people that are watching this. The reason I share similar, I made the joke to start this was all of your work isn't done looking for stocks before the market opens,
Right.
right? Like this work is done, whether it's on Saturday, Sunday, the research we already provide for you guys to kick off your idea flow. You're already doing that stuff. So that when the market opens, it's just execution time. It's not research time. Is that fair?
Oh yeah, absolutely. Yeah.
Okay.
Yeah. Yeah.
Okay. She said, what websites, boards, discussions, etc. Hopefully you're not any stock boards. If you are, run for the hills. Etc. Do you view before the trading day starts? You answered that already.
Yeah.
Let's,
Quite value line.
yeah.
Yeah.
On the same note, what, if any, items do you review after the trading day is over?
Um, you know, I'll tell you what, from April to actually yesterday before the snowstorm, I'm at my golf course working when the trade during the day is done trading. I work part-time at a golf course like Monday through Friday. I'm there 7 days a week actually, but Monday through Friday I'm working. And I start at noon and I work to the end of the day, or until dark, I guess. So when the market's done at the end of the day, I don't look at it till I get home just to see what happened. I look on my phone to see how the market did. That's it. Nothing special. There's nothing secretive I'm doing. They're probably doing what I'm doing already, just looking at our positions, and that's it.
Okay.
So
And
yeah,
look, I'm going to add to this. I think you're able to do that for a few reasons, in my view. Again, you can push back on it. Number one, you've been at this for 8 or 9 years. Number two, you have a process that you've done the work on. Number three, you're not day trading, so you don't really have to
right.
review much. So I think that's important. Finally, Ann, do you have a set of list items that you review or check out over the week? And I think these are all good questions. Anything you look at or view over the weekend, what does that look like?
I don't. I No, just I just do some reading, light reading of the financials. Like I said, Barron's. I subscribe to the Wall Street Journal Plus, it's called.
Yeah.
So that's what I do. I look at the IBD 50s, stuff like that. That's all I do. Nothing that takes a lot of time.
Yeah.
So, I don't
So,
want you to think that I'm in here 6 hours researching something. I'm not.
well, you're not, because again, let's, and I'm not going to plug our report on this, but the reality is this, is I told you guys at the conference, look, I've done this for 2 decades, and you get to a point like where you are now, and I'm happy you're at this point where you're like, I want less time away from this. I want less time in front of the screens. I want less bullshit about having to read websites. I want to do all the research and have information at my fingertips. So I put this stuff on and I can go do other things. Okay. So I think what you've done and what a lot of traders, and again, I'm not plugging this, but I am in some sense. You've just got to a point where you've made your investing efficient. You're not, we talked about at the conference. Why sit there and pretend that you're a macro analyst at a hedge fund running $50 billion when you're not? Just make this easy on
Right,
yourself.
right.
you know, and it's again, the IBD 50. For those of you guys that didn't catch this, I've talked about it in FOPT. I'll tell you guys now, the IBD 50 is a well-respected list of equities that very, very good money managers have used for decades. I learned it from Courtney Smith, who passed away sadly a few years ago, who was a hedge fund manager, a mutual fund manager. I was not really an intern for him, but I helped him in 2010 when I was in LA. The IBD 50 gives you ideas. Okay. These guys already do the research on these companies. I mean, they're good at what they do. So just look at it and say, look, what's the story? What are the technicals? And then you can find ideas from that. So I think I've taught a lot of you guys to do this as well, to just be efficient. You don't have to be an analyst if you don't want to. And I think at the end of the day, and we'll start to wrap this up, you got to make a decision. Are you here to pretend to be an analyst, or are you here to actually just make money? And that's it. I think that's a fair statement. So
Yeah, absolutely. When I took the FOPT and you talked about the IBD 50 and right in the video, you're like, it's that easy. I'm like, no, it's not, but it is that easy. It's like, God, how come nobody told me this before for 10 years,
yeah.
Yeah, it is that easy. Just be on top of it and go from there. But if you look at a lot of the stuff are pharmaceutical companies, stuff like that, I think,
Yeah.
or biometrics. But you look at the chart on some of those things are vertical. A lot of them.
Yeah.
It's something I stay away from though. I don't want to trade those companies. It's
Yeah, but at a very minimum, you're starting the idea generation process. Okay. And I'm going to wrap this up and we'll go through the final question that came through is at the end of the day, you've got to generate investment ideas. If you can't generate investment ideas with a process that's repeatable, I mean, you either index your money into a mutual fund or just, I don't know, give it to somebody else to manage. But number two, the price action analysis is allowing you to legitimately look at an idea that's already been done. So you talked about the LongVol report earlier. We put out these ideas. I mean, you read the notes on them because we give you the notes, but you're saying, okay, look, I know you guys are doing the research on it. I don't need to do it the second time, which again, you don't need to. So you're just saying, look, I'm going to take this idea. I'm going to put the price analysis on it. If I like it, I'm taking it. If not, and I'm waiting, I put a trigger. When it triggers, I get into the position. And that's how it's so simplistic in the approach. Is that fair?
Absolutely. That's fair. Yeah.
Okay.
It's that simple.
Okay. So that's it. Okay. So I was wrong. There was another question. It was somebody giving a comment about something else. Okay. So look, I think that's it. I think you've had, like I said, an incredible year on this stuff. Obviously, you've repositioned on the lows. We did too. We put some money back to Generac and other ideas. But again, I think this is year 2 or 3 with us that you've done well on. It's not a one-off. People like to do these things where, they're like, oh, we just made 50K this month. Okay. I mean, you're making pretty large trades on a regular basis. At the end of the year, the point is that your returns are risk adjusted, which we didn't talk about. And I'll explain quickly before we end this. You're not putting $1.3 million to work in 3 or 4 ideas. You're spreading the risk out. So at the end of the year, you end up risk adjusted. So when you have October happen, you're not taking it, on the chin, getting carried out in a stretcher and down 50%. Yeah, you're down a little bit, but you're still net positive on the year. So next year, if you can pull in 20 or 30% compounding year after year, 2-3 years, whatever the number is, it compounds and you're up a good amount of money. And again, you are retired, right? Is that right?
Yes.
Yeah.
Yes.
Okay. So yeah, that makes sense. Anything else that you want to cover before we wrap this up?
The only thing I want to recommend is a couple things. If you do put a lot of positions, make sure they don't all expire at the same time. Try to stagger your expiries the best you can because you can take a big hit if something goes bad on that. And another thing I learned from a stock chart is if a stock goes vertical, it's probably coming back down vertical too. And I've seen that. Perfect example would be Oklo. So it's
Did you
that
short
happens
that?
more than you think.
Did you short that name?
I did not.
Yeah, neither did I. I was too busy. I forgot what happened in October, but no, we had a
Yeah,
small short on it, but it was like 20 contracts. It was nothing. But yeah, yeah.
yeah,
That was free money on the downside too. So
yeah.
okay. So look, I think this is a good interview. I think you guys got a chance to see somebody's approach to this. And again, to recap this, I think a lot of things go well for him on his approach. Obviously, number one, people talk about strategy or edge in this business. The way we look at this is portfolio management, number one. So it's not just like one strategy. He's, again, looking at idea starters on companies. Once he understands the company, the starter, he's adding the price action on it. Once that's done, he's chosen to execute the ideas through deep in the money options at the money in a few verticals. And he's running multiple positions in the portfolio, which really is a proper long short approach to portfolio management. Okay. So I think that encompasses it. With that being said, thank you for taking the time before Thanksgiving to do this. I know everybody appreciates it. They appreciated you talking at the conference with them on off hours. And I appreciate you being a subscriber and being around. So,
Thank you. Thanks for having me, Dan.
all right. Thank you.